What's up, people?
It's a rolling, not a stop. Watch shit don't never stop.
What's up, people? Your boy, Mr. Trader, died here on this lovely Tuesday afternoon. I want to do something different. I ain't been live in a while talking about this market update. So a lot of folks are so surprised about the market and how this pullback and this and that. We're in the bear market, we're in the bull market, blah, 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 blah. What we need to understand is, people, that this market comes back. Okay, our economy is the strongest economy in the world. Okay, we're the strongest economy in the history of the world, as a matter of fact. All right, there's never been a time where the American economy is not going to come back. So again, now is the time to buy all of these little cheap stocks, crypto coins, these all these projects. It's the same, this is the same thing as going to a store and getting stuff on sale. Yeah, exactly. Travis Towns buying dips. And that's what a lot of people don't understand, man. A lot of people, oh man, the market's down and running. Like, no, man, this is the time to go get the market. This is the time to attack the market. If you have the money. If you don't have the money, then don't. You don't. But if you do have money laying around, this is the time. Why do you think the Warren Buffetts and the Mark Zuckerbergs and all them get rich? Because times like this, they buying, they copping and grabbing. They throw it in the bag. The average investor like me or you is somewhere, oh no, I'm kind of nervous here. I don't have enough money. And if you don't have enough money, I understand that. But if you have money, then you should get into and start buying these dips. Because this is what the market's about, buying dips. Get it where it's low. Buy it low, hope it roll up. That's trading. Buy low, sell high. So, so many people are nervous, and that's all just a little, it was just a little a midday live, because I'm sitting there at the office doing all my chart work, and I'm getting some questions. So many people are worrying about the market. Should they buy? Should they buy high? Should they sell high, buy low? Or a lot of people are buying high and selling low, and that's not the thing. We want to let the market come back, because it's going to come back. It's not going to stay down forever. It don't stay up forever. The market oscillates, which means it goes in ranges like a fan. You know how the fan oscillates from left to right. That's how the market works. Except the market works up and down. The market oscillates. It goes up. It goes. It's like a wave. Up, down, up, down, up, down. So stop being so nervous. Hold your positions. Again, this is where the DCA comes in. Dollar cost averaging. Because when you learn the dollar cost your average, your positions actually get smaller because you're buying so much more at a smaller position. It averages out when you bought it from the higher position. So again, you guys got to learn DCA, dollar cost averaging. And this is for, now I'm gonna make this a very basic one, because this is for stocks or forex or crypto or these blockchains or the metaverse. This is for all projects. Buy low, sell high. A lot of people bought high at the top of the bull. Now we're in the bear. It's gonna come back down. So many people are selling at the low. No, you're supposed to hold and actually buy more at the bottom. So when it goes back up, you're twice as much more ready, because you got your original position that you had in the position you bought at the dip. Now, see, this is when you learn how to read charts. So many people say, "What's the dip? When is it dipping? What is the dip over?" You gotta learn to read your charts. You gotta learn about RSI, your overbought, oversold areas, moving averages. Is the price sitting on top of a moving average, or is it sitting below a moving average? Those are simple things. The moving average is the 200, the 50, the 100. Those are things you need to throw in your charts to know about the dips. Is that, yeah? So everybody keeps saying buy the dip, buy the dip. What is the dip? Is the dip over? I don't know. I know about the song. When you dip, I dip, we dip. Freak nasty. That was back. I was like 13 when that came out. Back in 95, 96. That was my joint when you dip. But that's what the market's doing, man. When the market dip, you buy the dip. But you gotta know the dip. So that's why I'm not gonna do no screen sharing nothing. I'm in my office. So you want to get on some SMAs, your moving averages, throw them on your chart, your 50, your 200, your 100. The way the price reacts into that moving average and other things should tell you where the dip is good. So because it's money, but I got a little, it's something I want to share, but I can't share on my screen. Hold on, I got sent it to my email. And I actually stole this from a guy's story. I said, I'm a story stealer. If I see a good thing in your story, I copy and paste it like it's mine. But it was a guy on Facebook. That's a guy, his name is Ninigo the Investor. He put a good thing up here. I'm trying to find it. Here we go. It's called Just a Reminder. Man, I'm gonna figure out a way to put this on this thing. But it told you how every time how the market falls, it comes back. So when the market went back in 1973, it went back 48 cent all-time highs. 1980 went back 27 cent, came back. 1987 went back 34 cent. 1990, 20 cent. 2000, 49 cent. 2008, 58%. Last year, COVID went back 34%. And you see what happened. The market always comes back. It comes back stronger, ready for war. So that being said, man, you guys gotta just be in the market. You gotta wait it out because trying to sell multiple things, you're gonna fall, you're gonna collapse. So you need to know how the market works. You need to know about the ups and downs and the ins and outs. That's what a lot of people don't get when they trade. They just jump in the market all willy-nilly. And then now this is what so I had a conversation with somebody. Somebody was trying to tell me how sports betting is more lucrative than crypto. We had a conversation and they was serious as shit. They were trying to explain to me how betting on sports makes more money than crypto and forex and stocks. I'm like, wow. And you should never have that mindset, man. That's not a mindset to have, yo. So a lot of people need to understand how the market works. That's just basically it. It's so many beginners hopping in the market. It's a lot of easy money, it is, but you gotta know what you're doing. So I lose money in the market all the time. So I lost a couple of cracks the other week. It happens. But they tell you, don't invest more than what you're able to lose. And two, do simple research. I cannot emphasize that enough. So many people read an article or hear a tip from someone else to lose money and blame that article or blame that tip instead of blaming themselves. Like, think about why would you put your hard-earned money on some coin that you know nothing about and hope it go up? Don't you think you ought to read about that coin or that stock or that project? You want to do some research? Like so many people, like, you know what I mean? Like, so many people just throw their money because they heard from somebody. Like Dogecoin, a perfect example. Yo, listen, Dogecoin is a shit coin, okay? But it got pumped by billionaires, so it made money. So if you make money on Doge, that's good. But if you're a person who knew nothing about crypto and you threw money at Dogecoin and now you're mad that you lost money, ugh. Because if you knew about crypto, you would know that Dogecoin and Sheepcoin are like the two worst coins just to blindfold your money at. You would have went into something more positive. Like, all right, so you know how the stocks got blue chip stocks? There's blue chip cryptos also. Bitcoin, Ethereum, Litecoin, XRP was, but it's not. I don't know, they're coming back. But anyway, Bitcoin, Litecoin, Ethereum, you know what I mean? Those are the blue chip cryptos, okay? Like the blue chip stocks, the Apples, the Amazons, the Googles, Oracle, the Dow 30, the big boy stocks. So you want to in crypto, if you're going to blindly throw your money at crypto, blindly throw that Bitcoin or Ethereum. Those are the two biggest coins, and they're consistently going up. Even this bear run we're in, I wouldn't be too worried because thing with crypto is very volatile, right? So the ups and downs are going to be extremely volatile. That's what you need to understand when you invest in the market, the volatility and the beta. When you're dealing with a more volatile investment, you're going to have higher swings and lower lows. That's just how it goes. A lot of people think it's just free. It ain't. It's risk in everything you do. Like crossing the street is risk. You can get hit by a car. Like, it's risk in every single thing you do. So you got to determine your risk. And that's a lot of people, the risk to reward ratio when you trade. And a lot of people do not grasp that concept. And that risk to reward concept, tongue twisting. Say that 5 times in a row. Risk to reward, risk to reward, risk to reward. That risk to reward, a lot of people do not get that. Hey, I'm a lot of people. Because all I see is the reward. I never see the risk. And that's why I lose a bunch of trades myself. So I'm a greedy trader. And it's something else. You need to know the mindset. Are you long-term and short-term? If you're a long-term investor, this dip is nothing. This dip is pretty much is good for you because you can buy more if you're holding for the long term. Now, if you're a short-term a short-term swing investor such as myself, what a dip can be, it could be in a way because it's messing up your investment. You got to be in and out. You don't hold for the long term. So it could kind of mess up your day trading, but you got to know what you're looking for. And that's what the point is about, man. So many people's hit me up, yo, what's this? What's this? What's that? Yo, you got to know. I got people asking me what to invest in, but they don't know what they want to do themselves. Do you know what that makes sense? It's like, so before you know what you want to invest, you got to know, are you long term or short term? Are you looking for stocks? Are you looking for crypto? You looking for forex? You want to day trade? Like there's so many variables out there, and I think a lot of people just see me again. I'm a lot of people. I see the money. I'm in stocks, forex, crypto, but see, I know what I'm doing, but still, I still take L's, capital L's, like really. L on top of L Cool J, LL Cool Trader Joe. How many L's I take, but I still in the market because I know what I'm doing. But like so many beginners, it's because when you trade, it's the same mindset: fear and greed. We all go from fear, scared of losing our money, and greed, how much money we can get. That's how the oldest trader in the history of civilization to the newest trader. And once you quiet your mind and face your fear, face your greed, you'll be in there. You'll be in there. And that's the thing. So many people want to cut the bait and run. No, man, the market does not. Market never. I mean, think about it. Just think about the last time we had COVID, bro. Not even a year. And that's why I'm kind of frustrated with people. Just not even a year ago, the market did this. What happened? The S&P came back at an all-time high. That bull run from the post-COVID was the biggest bull run in world history. A year later, we're doing the same thing. Everybody panicking. It's like, God damn, you people should not invest in. You should really not invest. If this little got you all, just step up. Listen, if you're that worried, it's the same when you invest. Cash is king. Like, it's no problem having cash. It's no problem in the world if you want to just close all your trades or whatever you are and just keep cash on hand. That's what I'm doing, actually, matter of fact. But see, I'm in forex. So again, when you trade forex, it really doesn't matter because the forex is forex. It doesn't matter if it's a bull run in stocks or a bear run in stocks because forex is going to do its thing. So that being said, also diversify your investments too, man. Like all markets are correlated, right? If you know the markets are correlated, you would diversify to put some over here, some over there, some over there, because having all your investments in one pot, that's what a lot of people are just, and me again, I am a lot of people, So I'm sorry, but yeah. So that being said, diversify that investment. Again, you guys want to get into defensive stocks. I might do a live on that probably. I might go tomorrow night. We'll talk about defensive stocks. A defensive stock is a stock that people are going to get during a bear run. So just off the a bear market. So just off the top of your head, energy stocks would be a defensive stocks. I'm sorry, utility stocks. People got to pay their light bill no matter what. You know what I mean? People got to pay their light bill no matter what. That is a defensive stock because utility companies they're always gonna be good in a recession. What else? Soap companies. People gotta wash. They gotta wash their behind. You know what I mean? Food like milk. Like you guys gotta know when you're gonna invest in this market. And that's just my thing. If you're gonna put your hard-earned money to these people, you need to know what you're doing, man. So many people just giving money away, not knowing what they're doing. You want to know about defensive stocks, things that people need during a recession, and that's what you're gonna have to do. You're gonna have to use that, because this recession, it's not that bad. It's money all over the board. It's just about where the money's at. You know where to look for the money, and unfortunately, a lot of folks don't know where to look for the money. They just be all over the place, and you know what I mean? That's kind of what the problem is. Like I say, this little bear pull back. Oh, almost fell back in the office. This little pull back. It's really not even full a quarter yet that we pull back. You know what I mean? The COVID pullback was like, well, hold on, let me see where I stole this picture from. The COVID pullback was 34%. All right, this pullback, we're like at 28. We're like at 23. It's not even. I mean, it's a pullback, but Jesus Christ, people, the sky's not falling. This is enough to get your money right. Throw it in the bag. I'm on my fabulous stuff. Throw it in the bag. You know what I mean? Throw it in the bag, come back out, and there you go. So, yeah, don't let this market get to you. Don't let these positions get to you. At the end of the day, man, we're in America. We have the world's strongest economy, okay? Our economy is, they talk about China, but that's kind of manufactured. Our economy ain't going nowhere no time soon. Our dollar, the US dollar, is the world's strongest currency. not strong. It's the world's most dominant currency. Like it's like if people know how the financial world works, you know, it's impossible for our economy to go down. So if we go down, the whole world goes with us. So I mean, that's kind of any economy. Like China, like when China had that Evergrande bond, that shocked the whole world. So that's how it is. What's going on, good brother? This is my business partner over here, Mr. Sutton. So that's how it is. Our economy. Have faith in the economy. What's going on, good brother?
What's going on?
I'm just doing a midday live. I don't know why he's acting all shy over there. That's my partner over there.
You got me on blast.
Yeah, he acting all.
Now I'm gonna talk to you.
Oh, all right. I'm getting like 5 more minutes. Yeah, pretty much, people. So, yeah, you want to do your research. You want to know about the dip. See, this is why it's important to know technical. I mean, I could just talk till I'm green, blue, yellow, till I'm rainbow in the face about technical analysis. Because once you learn the text, you can kind of see, oh, the dip's done, the dip's over. And also you want to check indices because indices track them. Tongue twisted. Indices track the market as a whole. So if you see the indices, if you see the S&P 500 going down, most likely your portfolio is going down. That's 500 stocks in the S&P. Same as the NAS 100 or the Dow 30. So once you track indices, that's a good overview of how the market's looking. You know. So on that note, folks, that's our little short, little 15-minute live on my lunch break. So buy the dips, buy your dips. Now, if you don't have the money, don't do it. But buy your dips, dollar cost averaging, things of that nature, things that can get you you know, things that get you a good position. Because at the end of the day, it's all about making money. That's what it's all about. Making money, you know, being financial literate. Oh, speaking of that, good segue to myself. I'm finishing my video for financial literacy. It's the first part in this series I got on my YouTube channel. So check me out on YouTube. G7 Global Investments. I'm throwing a video because all my videos are old. Like these live videos, they go to my Facebook. I mean to my YouTube. So you go to my YouTube channel, it's all these videos I got live. So I'm making new videos. And the first one is financial literacy. We're gonna start from the beginning. You know, the 4 tenets. On that note, people, I'm out. I'll get some lunch. My partner looking at me. All right, here I come, man. Here I come. But yeah, always remember, man, the market comes back. Okay, the market is not down, it's not out. I mean, I started this TRADEORDIE stuff during COVID. I remember seeing these exact words. I remember saying these exact words. The market ain't going nowhere. You know, it's not. The market's really nonstop. And that's why I play that song nonstop, because it's really nonstop. Crypto's 24/7. Even though the stocks 9 to 3, it's still all day long. It's nonstop. So on that note, people, have faith in your investments, man. Do not close out, because you only lose the trade if you close out. Just because it's down, it's not a closed trade. Once you hit closed trade, that's when you lost that money. So on that note, man, keep your mind right. Don't panic sell. Do not panic sell. Hold. HODL. Hold on for dear life. Yeah, folks, I'm gonna eat me some good lunch. All right, I'll stop this.